Hello guys, welcome back to yet another episode, and in today's lesson, which is lesson number 11, number 12, we are going to look into how can you get to combine Fibonacci retracement both with the candlesticks. So I'll be taking you through the entire process, and I'll be showing you how you can get to combine the two to come up with a trading strategy. But before you get into that, if you're new to this channel, just go ahead and make sure you hit the subscribe button, which is down below here. Also turn on the notification bell so that every time I have a new episode, a new lesson, a new tip for you, you always be the first one to be notified. And of course, you can get to join our WhatsApp group. The link is also in the description section so that every time you have a new update, you always be the first one to be notified on the WhatsApp group. So let's get into our today's lesson. So to start with, last time I talked about Fibonacci. And with Fibonacci, there are a number of things you need to know. Let me start by just doing a quick highlight. So there are key levels. We're talking of key levels of Fibonacci, of Fib. First of all, we have 0. We also have 0.3 H2. We have 0.5, 0.618, 0.79, and of course we have 1. If you have used Fibonacci before, you do understand these 0.5 to 0.618. This is what we call with 0.5 and 0.618, this is what we call the golden zone. So this is the golden zone, meaning in most cases the market gets to trace to this area. So how do you get to combine Fibonacci both with candlesticks pattern? So that's what so here's the thing. After understanding these key levels, let me just get to draw, for instance, an uptrend. In an uptrend market, for instance, we have an uptrend market like this. So in order to know where the market is going to retrace, first thing first, let's just combine three things. Let's add we also have zones. So here we have a zone. So here we have a zone. This is a zone. So this could be depending on the scenario, this one could be a resistance zone, and also it could also be a support, depending with where you're seeing or you're viewing things from. So for instance, when the market was below this zone, this one acted as resistant. This was a resistance zone. But after the market got to broke this zone, and now it's above that zone, it now becomes a support zone. So that's the first thing we'll need to understand. You get to work with zones, that is resistance and support zones. And then let's bring the concept of Fibonacci to make our strategy more convincing and also more valid. So let's pull our Fibonacci from here. Let the 0 be here, and then we have the 1. You normally pull from the high, the recent high, and the recent lower high. So the recent lower high. So it's important for you to pull your Fibonacci from the recent high and the recent lower high. So for this case, our 1 will be here. If you get to pull your Fibonacci, chances are we have 0.3 H2 here. We have around here, this could be 0.5, and of course 0.618, and of course around here we'll have 0.79. So with these key levels on the Fibonacci, in most cases, these are scenarios that I've tested over and over, and I've noted it normally happens every time you get to incorporate both resistance zones. We also, the zones that is could be a support or resistance zone. If you get to pull your Fibonacci, in most cases, the market gets to retrace until to these 0.5 and 0.618. This is what we call the golden zone. I've said this time and again, it's called the golden zone. So with this golden zone, now here, since this is an uptrend market, so what we need to look at right now, we'll be looking for buying opportunities, since we are looking for the market to keep making new high highs as well as new lower highs. So for this case, once the market gets to hit this resistance zone, we don't expect the market to break this area, but there are a couple of things that can get to happen here to give us a go ahead to get into the market. One of which we'll be looking for candlestick patterns. We get to look at the candlestick patterns, which are they get to give us, we normally consider them to be our entry regions. One of the candlestick pattern that we'll be looking at here, we could be looking for hammer. Hammer is considered to be a bullish candlestick. We could be looking for a hammer. Number two, we could be looking for a double bottom. We could be looking for a double bottom, and with a double bottom, we expect the market to create a small double bottom here before proceeding to go up. The third thing that we could be looking for, the morning star. Morning star, this one is considered to be the 3 candlestick pattern, which is more of a 3 candlestick pattern, which is a bullish pattern to push the market up. So for this case, the fourth one, of course, we'll be looking for. The fourth one is the bullish engulfing candle. Bullish engulfing candle, which gets to show you that the market has momentum to go up. So for this case, you will place your stop loss around from here. You get to place your entry right there. That will be our entry point. Then our stop loss will be around here. That is the stop loss. And then our take profit, we could target maybe a ratio of 2:1 or even 3:1, depending on how the market, the momentum that the market is showing. So for that case, our take profit will be here. So hopefully you're getting what I'm saying. These things, they're not very hard. You just need to keep doing them over and over for you to allow them to sink, so that you get to see also these opportunities in the market over and over. And also another important thing to know is that the more you get to dedicate more time to spend on the charts, the more you get to stand a chance of understanding more about the charts, and of course you get to experience different scenarios. And of course, with more experience comes more polishing of your skills. So that's for the case of the Fibonacci and the candlesticks. From here, we'll be looking into some of the indicators that I get to use before we get to proceed to the charts. So hopefully you're making follow-up on these lessons. If you need any clarity, talk to me in the comment section, as well as you can also talk to me on our WhatsApp group. So that's it for today. And of course, hopefully I'll be seeing you in our lesson number 13.